Jon Lamb of Orion Resource Partners, thank you so much for joining us here at the One-to-One conference.
Thank you for having me.
Well, you have a really good grasp on the mining sector, so happy to speak with you today because my question to the panelists this morning was, the junior mining sector is really facing a cash crunch. They can't get a hold of money. What can be done to stop the bleeding?
I think the key in the market has been that the traditional source of equity capital are no longer there. Mining companies are increasingly having to turn to what may have been historically more alternative forms of finance to raise capital, like streaming, private equity. Those have really entered the main stage of financing developing mining projects today. Equity markets, in a more broad sense, are very challenging to raise capital in, generally, unless you have a strong partner or some unique aspect to your story.
So how would you rate the health of the junior mining sector right now?
There remain very interesting projects out there, but I think the fact that there have been alternative places for more general investors to put capital when the mining sector has not delivered on great returns despite relatively good prices recently.
And the proof is in the numbers. I mean, if you look at how much money cannabis was able to raise, comparing that to mining companies, it's tremendous. So
it's very surprising.
But how do you keep up with these other sectors that are sexier, more attractive right now, like the cryptocurrencies, like the cannabis stocks?
I think overall, looking over the long term, there remains a good opportunity in mining today. But if you're looking at how am I going to deliver results quarter on quarter from a performance standpoint, mining is going to continue to be challenging.
Let's get your gold forecast now. Today's a good day for the metal. Tomorrow might be a different story, but today, in this moment.
Today's a good day. I think gold has seemed to found a home here between 1250 and 1350. Without any macro reason to have it move, I think that's a pretty stable range. Looking at it in other gold priced in other currency terms, Australian dollars or Canadian dollars, it's a very high price in a historical context, even competing against the highs of several years ago.
And what about silver? You know, the gold-silver ratio at a 26-year high here. When can silver finally catch up to gold?
I think when gold breaks out of its range in terms of U.S. dollars, silver will follow it either to the upside or to the downside. I think right now the gold-silver ratio, thinking about it in historical terms, is going to remain at these high levels.
So as an investor, what would you be looking at right now? Would you be getting into physical? Would you be buying the miners? If so, are they the mid-tier, are they the juniors, are they the majors? What do you do?
I look for good leverage to price, and that's going to come from companies that have meaningful production, have additional production that can come online, companies that have a competitive cost position that can withstand some downside.
Who are you liking right now? Can you give us a name?
I can't give a name, but I think
Are they in North America?
The North Americans are more competitively priced, but I think that's where the market's going to be challenging. The Australian gold miners have remained very strong throughout this, and I think that's given by picking up good assets at a good time in the market and benefiting from that very strong Aussie dollar gold price.
We've seen the Australian invasion here, right, in North America. They're hungry.
I'm curious to see if that continues. I think that as they continue to grow their business, looking at Canada and North America more broadly as a source of potential acquisitions or new investment opportunities is going to be increasingly common. It's going to enable them to kind of benefit from the multiple arbitrage that they enjoy in Australia.
Jon Lamb, I appreciate you coming on the show.
Thank you.
Thank you so much for stopping by.
Thank you.